Hey traders, so welcome back to the channel and welcome back to another Sunday video. The markets have been wild recently. If we see gold, if we see the silver, both of them they are continuously in the full controls of bull. Meanwhile, if we see the Bitcoin or if we see the Nasdaq and even the S&P 500, all of them they are falling down from the cliff. In this video, we will try to understand that is this the time to buy the dip in the stocks or more pain to the downside is coming. At the same time, we will be talking about silver and we will be talking about gold. That what is maybe coming in the near future for them. Are we going to see some continuous bulls in gold and silver or a deeper profit taking move to the downside is coming? So we have a lot to cover in this video. So without any further ado, let's dive in. Before we actually start talking about these different asset classes, make sure you hit the like, and if you are new to the channel, make sure you hit the subscribe button as well. Now, first of all, starting with the Nasdaq. I am currently on a position in the Nasdaq, and this obviously may look a silly position to you now, but my idea on the Nasdaq was that we have actually bottomed out on the Nasdaq and we can see some continue higher highs and higher lows on the Nasdaq. But obviously on Friday my idea badly failed for the Nasdaq and I am currently on a new position on the Nasdaq. And if you just see, I took my initial position here and then my second position was here. But my initial position, it got hit in a stop loss, and my second position also looks like that we will be hitting my stop loss as well on this very soon. Now, we will cover the Nasdaq first from a technical perspective, then we will move on to the fundamental and sentimental perspectives. First of all, from a technical perspective, let me just remove this for now. From a technical perspective, we can clearly see that bears started actually to take this market down from the all-time highs. We did see a rebound, but again, when we tested this major resistance level around the 20,500 or 400 levels, the bears again took back the control and they again started to drop this market. And right now, we are currently testing a major support zone, which may turn out as a double bottom. Now, I will be very clear on this. I am still a bull on the Nasdaq. Now, from the technicals or from technicals only, obviously, from technicals, you may see this as a foolish idea. But there are many other reasons to be a bull on the Nasdaq now, and those reasons are the sentimental fundamentals and the sentimentals, and we will be covering them in this video. I may take a little more time with the indices in this video, so make sure you stick around as very valuable things will be shared in this video. Now, for the Nasdaq, I'm not saying that this is the bottom and just go and invest everything you have and we are going to see some new all-time highs or stuff like this. We can very well see more downside in the Nasdaq. We can go to test this 18,500 levels, or we can go even down to test these levels around the 17,500 levels before making any moves higher. But what I want to say currently is that I don't see any reasons to short the Nasdaq or short the S&P 500 or short the Dow Jones. And why I'm saying this is this. Okay? These are the sentimental factors which I am currently monitoring and also some other fundamental factors too. Now, if we see this sentimental factor, we can see the markets have been going through some extreme fears. And if we see the fear, we are in an extreme fear territory for 1 month. I will talk about this, but first let's see some other sentimental factors too. If we see the AAI investor sentiment, we can clearly see that more than 50% of the investors, they are bearish on the stock market for continuously for past 4 weeks. And this is a sign that the crowd is very much on one single side. Most of the crowd is currently bearish. The retail is panicking. The investors, they are dumping their stocks like we are going in a recession or stuff like this. But there's more into it. If we see the data and if we see that what is happening in the US markets currently, US economy currently, we have some fear of the tariffs, okay? And the tariffs are the main reasons that this market is dumping currently. There are tariffs uncertainty, the tariffs are happening, the tariffs are not happening. There are some uncertainty related to the trade wars and stuff like this. So this is a main factor why the markets are dumping currently. Markets are mainly pricing out the tariffs, but there's something more to it. At the same time, along with tariffs, what the people are expecting? People are expecting a recession is coming. But we are traders, and as traders, we have to trade with the facts. We have to trade with the data, and the data doesn't tell me that a recession is coming. If we see the US labor market, the US labor market is still very much strong. If we see the US economy, the GDP data, and all the stuff like this, the US economy is still very much strong. Yeah, there are some there are some predictions that in the future, after 6 months or 1 year, the US economy may not do well, the GDP will contract or stuff like this, the unemployment will rise. But those are just predictions, okay? Those are not the facts. We have to trade based on the facts. So the facts which they are telling us, that the labor market is still very much in the right place, the US economy is still also very much in the right place. Now, if we move on and talk about the inflation data in March, which came out with the CPI and the PPI, it was actually a cooled off data. So the inflation also looks like for now that it is heading in the right direction. Now, the PCE data which came out on Friday was a little hot, but still with the inflation, we are going in the right direction as it is looking currently. So this is the overall picture. The markets have some uncertainty about tariffs, which is very valid. Okay, so this is the valid thing, but the markets fear about the recession or stuff like this, or the US labor market, or inflation, or the US economy, the stuff like this, they are not valid. They are all wrong, and they all are very much invalid. Now we will talk about this all this in this video, and we will come to a conclusion that how we can trade all these ideas and how we can benefit from them. As I have just talked about that the US economy is still in a very much right place. Okay, the US labor market is still in a very much right place, and the inflation is also heading in the right direction. Now, this downward move, all this downward move, it was mainly fueled by the tariffs. And the tariffs, what are tariffs actually? The tariffs, they are just being used correctly as tools to achieve some trade deals, to achieve some other deals by the Trump administration. So this is what is happening currently. The markets have been fearing tariffs, and that's why the markets have been dumping. But markets have been thinking about the tariffs too much. The tariffs are just tools, and they are tools to achieve some trade deals, to achieve the negotiations and stuff like this. They are nothing more than this. And also, one very last but the important factor here is that the markets have been fearing tariffs, but the tariffs are not currently in place. The tariffs are going to come on 2nd April. What this means? This means that we are selling the rumor. Okay, the rumor is that the tariffs are coming and everything will be disturbed, and this will happen, that will happen. But when the tariffs will actually come, I think as we have already being priced in by as we are already being pricing in the tariffs, I think that when the tariffs actually come in place, we can see this market bottoming out, because all the fear which you have related to the tariffs, it is already being priced in. Okay, so this is like the markets have already been expecting the worst. Okay, now when the worst will actually happen, I don't think so that there will be more of a dump. We can very well see the Nasdaq or the S&P 500 or the Bitcoin or all these risk assets bottoming out when the tariffs actually come in place. Now, there's one very many important factor to it. One another many important factor to it, which is that if the tariffs are worse than what the market has been pricing in, then we are doomed. Like, I can't explain it in a better way. We are simply doomed if the tariffs are way worse than what the market is pricing. Like if the market is pricing some high level tariffs, uh, if this is the fear, this we are pricing some high level tariffs in this market, and the tariffs come as very high, then we are simply doomed. And obviously it is very like, and it will be very likely then that the S&P 500, the Nasdaq, the Bitcoin, they all enter in a major bear market, because this will increase the uncertainty and this will increase the fear, and then there will be a valid reason to sell all these stocks or all your Bitcoin or all your risk assets which you are holding. But currently, if you see the longer run picture on the Nasdaq or on the S&P 500 or on the Bitcoin even, it's actually the same thing on all these risk assets. So if we just see the longer run picture on the Nasdaq, we are still in a very strong bullish trend, and this is just a correction. This is not a bear market yet. Okay, we are just, let's see how much we are down from the all-time highs. So if we see how much we are down from the all-time highs by measuring, uh, okay, so we are currently down only 13% from the all-time highs. If we go around 20% or something like this, then we will enter a bear market. But currently, it is not a bear market. It is obviously a bull market, and this is just a correction. And this correction is happening because the tariffs are being priced in the markets. Now, one last thing. I have been saying that this is the last thing, but obviously, again and again, many things come into my mind. That's why, obviously, it is not a scripted video. So whatever I remember, I'm just telling you about this market. So the thing is that the tariffs are tools. They are tools to achieve trade deals. They are the tools to achieve some other deals, whatever they are. Okay. This is the job of the tariffs. And with the tariffs, whenever the tariffs happen, you get the countries like if there are trade war between America and Canada, then when the tariffs actually happen, they get on a negotiation table and they negotiate on different things, and then the tariffs are taken back and the tariffs are removed when those deals are achieved. So tariffs are just a tool to achieve some deals, and when those deals happen, the markets the markets celebrate, the risk on assets celebrate, because the uncertainty is behind them now. So this is the reality of the tariffs. The markets have been fearing tariffs, like the tariffs will cause a recession or tariffs will dump everything, or because of tariffs the US market will crash, the US economy will crash, the unemployment will rise, or the inflation will rise. Obviously the tariffs are something to be feared about, but they are not as much of a thing to be worried about as the people are currently panicking. Okay, so the conclusion is that I am still very much a bull on the Nasdaq or on the S&P 500 or on the Bitcoin as well. But I took some bad positions, you can say, on the Nasdaq. But right now I am still a bull, but I will be waiting for some confirmations from the Nasdaq. We can very well see that this being turned into a double bottom, but this doesn't mean that if my recent trade stops out, then I will be eventually re-entering. No, I will not be doing this. Instead of that, I will be waiting for some higher highs being formed again. I will be waiting for the buyers to convince me that they are holding the support levels now, and we are seeing some bullish structure. If we do see some bullish structure, if we do see buyers taking back control, if we do see the resistance areas now being broken and held as support, then I will be interested to enter in some bullish positions at the levels in which I am interested. So this is my plan for now. I'm not a bear on the stock market. I'm not a bear on the US economy. I'm not a bear on the US indexes. I am still a bull, and all I'm waiting for is currently some better technical opportunities. That's it. Now, same thing for the S&P 500, same technical thing, same fundamental thing, and same sentimental thing. The S&P 500 also, uh, it looked like that the S&P 500 has found a bottom in the last week, but actually on Friday we gave back, we moved all the gains, and it was too bad to say this, but still it is what it is. Same thing for the S&P 500 too. I will wait for these resistance zones to turn as some support zones, and I will love to see buyers actually holding all these support zones. If we do see this, then I will be interested in some longs on the S&P 500 too. From a sentimental thing or from a fundamental thing, I have explained that to you in full detail. I am a proper bull on the US indexes, but I just need some technical confirmations to get some better entries. Same thing for the Bitcoin too, but for the Bitcoin specifically, what I need to see on the Bitcoin, I need to see Bitcoin reclaiming back this 95k level. If we do see that the Bitcoin buyers have reclaimed back this 95k level, as this is the major resistance zone, and if we see that the buyers have reclaimed back this level, then obviously I will be interested in some longs on the Bitcoin as well. So this is my game plan for the Bitcoin. Now for the last two assets which are remaining, we are going to now talk about silver and gold. I took a trade on gold, and I actually shared this in my free Telegram channel. Never mind, just leave it. It's just two. It will be some sort of. Never mind, leave it. So I took this trade and I shared it in my Telegram channel, and this trade was taken around the 2865 level when we bounced back from the support zone, and I took my profits around the $302 dollar per ounce level on this trade. So this trade was shared for free inside our free Telegram channel. I'll drop some educational content type of things in my Telegram channel. It's totally free. If you're someone who is interested in that, I will drop the link in the description and you can check out my Telegram channel from the link. Now, talking about gold, I took a long position on gold, and the bull run is gold is also being fueled by the same reasons due to which the stock market is currently dumping. So the bull run is gold is being fueled due to higher tariffs uncertainty, due to retail panicking, and due to, you can say, like high fear in the stock market and stuff like this, due to geopolitical tensions, due to rate cuts being priced in, due to what we saw softer US economical data in the last month, and some higher central bank demand. So these are some of the few factors which are fueling all this bull run in gold, and that's why I took a long position in the gold. And for the same reasons, I took a long position in the silver too in the last week, and I am basically using them as a hedge for my portfolio. But right now, what I think is for gold is that we can see some profit taking move in gold. Why? Because of the same reasons why I think that the stock market, that the US indexes have bottomed out, and we can see some uptrend starting in all these US indexes. Due to for that same reasons, I think that the gold can see some dump. Okay, and I will explain it to you as well here on the side of the gold too. See, this major bull run on gold was mainly fueled by the tariff uncertainties and by the trade war uncertainties, and by you can say the fear which the people have currently. But how the things are unfolding right now, we are finally very near to the date of the tariffs, which is the 2nd April. So on the 2nd April, all this uncertainty related to the tariffs will be finally behind us, and the markets will accept the reality finally, and all the pricing in of the tariffs, the trade war uncertainties, this will be finally behind us. And that's why, due to that, we can see some profit taking move in gold, and we can test some lower levels, maybe even the previous all time highs. No, I'm not a bear on gold, but currently I'm just waiting for some better buy levels. With this tariff uncertainty being priced in, and the tariffs date, the reciprocal tariffs date actually being arrived, I think that we can see some profit taking move. Also, overall, if we see that the US economy is still very much strong, the US labor market is still very much strong. So there's no case like recession currently. And if you talk about the stagflation, there are some future predictions about the stagflation scenario. But currently, the stagflation is also not a base case, it is just the fear of the market. And the rally in the gold and the rally in the silver, it is like mainly driven by all these fears, and these fears, the markets have been pricing in these fears. That's why the stock market is dumping. Meanwhile, the gold and the silver, they are continuously rising. Now, all this fear related to the recession, or related to the tariffs, related to the trade war uncertainties, it is finally there. Like in the coming days, it will finally be behind us. And that's why I think you can see somewhat of a play like buy the rumor and sell the news. And this is, I think that this is the scenario which you can see in the coming days for gold. Now, maybe you can say that there's a lot of speculation in this video about all these assets, but I have told you everything based on the fundamental facts, based on the sentimental facts. I have shown you the sentiment in real time. I have told you about the fundamentals, what is happening with the fundamentals, and why you are seeing all these bull runs or bear runs in different assets. So once all these reasons they are behind us, you can see some profit taking in gold. You can see some to set the prices obviously at better buy levels before continuing to go on the upside. And you can see some short-term rally to the upside in the US indexes or in all the risk on assets. Same thing for the silver too as of the gold. I took a long position on the silver, and I shared this trade with my free Telegram channel. Again, I dropped some educational content related to fundamentals, technical sentiment in my free Telegram channel. So if you are someone who is interested in that, I will drop the link in description. Make sure you do join my Telegram channel from the link given in the description. It is totally free to join. No, for the silver has been in a massive bull run, and I took a long position on the silver. It was a small profit. It was like around a 1:2 trade for me, and let me just remove it. For silver, if we see currently, we can see that silver like is a perfect example of a uptrend now. You get higher highs, you get higher lows. You gain get some higher highs, you gain get some higher lows. Higher highs, higher lows, higher highs. And what is looking right now that you are again going to see some higher lows and then continuous higher highs. Now I am a bull on silver currently, but again for silver, I am again waiting for some lower levels. Because with the tariff uncertainty, when the tariff uncertainty is finally behind us, you can see some of the money which has been moving into gold and silver. You can see some of the money flowing back into all these risk on assets like the Dow Jones, the Bitcoin, the S&P 500 and the Nasdaq. When there was uncertainty, people took their money out from all these risk on assets and they started to put their money in silver or in gold to hedge their portfolio. Okay, but when the fear will be finally behind us, we can see the opposite scenario. We can see all this money from silver or gold being getting back in Bitcoin, Nasdaq, S&P 500 or the Dow Jones or even the Russell as well. So this is the scenario which can happen in the coming days. That's why I am cautious with my positions currently. I am a bull on the silver. I am a bull on gold. I am a bull on the S&P 500, on the Nasdaq, on the Bitcoin or on the Dow Jones. I am a bull on all these assets for all these risk on assets. So these are the risk on assets like the S&P 500 or the Dow Jones, all these assets. I am currently a bull and I am just waiting for some higher highs being formed, and I think that we can very well see them into the picture in the upcoming weeks as the tariffs uncertainty will be finally behind us. But for the silver and gold, I want to see some lower levels. Okay, before buying, I want to see maybe silver testing back again this $33 per ounce level, and if we do test this, then I will be interested to re-enter some long positions, and silver may then go and test some new all-time highs. So I'm interested in silver and gold, but before entering any new trades in them, I want to see some profit taking moves. I want to see some lower levels. Now, if we come to the conclusion of all which have been like spoken in this video, I will just draw simple stuff here so we can come into the conclusion. Now, for the risk on assets, what are the risk on assets? Risk on assets are like the Nasdaq, US indexes, the S&P 500, Dow Jones, Russell or Bitcoin. So these are the risk on assets. Now for the risk on assets, I am currently a bull on them. I think we have bottomed out on them from a sentimental and fundamental perspective. They are creating some very strong bullish opportunities, some generational wealth creating opportunities. But if we talk about the technicals are not currently clear. What I want to see on the side of technicals, I want to see some higher highs being formed on the short time frame, not necessarily on the 4 hour chart or on the daily chart, maybe even on the hourly chart. I will take this as a good bullish confirmation. If I see the Nasdaq creating some higher, starting to create some higher highs after rejecting from a support zone on even on the hourly time frame, I will take this as a bullish opportunity, and then I will look on pullbacks and buy, pullback and buy. I will be looking to do some stuff like this. So this is my game plan for the risk on assets going into the next week. Now, talking about the risk of assets. What are the risk of assets? Risk of assets are commodities like gold and silver. So for gold and silver, I am currently from a fundamental perspective, I am bullish on them in the longer run. From a sentimental perspective, I am bullish on them in the longer run. But from a technical perspective, I need to see some lower levels. If I do see some lower levels, gold and silver both testing some major demand zones, then I will start to build more long positions on them. Currently, I am not going to buy the high on them as I think a profit taking move is coming. So this was the conclusion. So this is the conclusion for the risk of assets and the for the risk on assets. I have already given to you the conclusion. Now this video got a little long, but I tried to explain everything in this video with proper fundamental, technical and sentimental perspective. I hope you liked the video, and if you liked the video, please give me the reward of my efforts. Please hit the like and the subscribe button. Do share the video. Do comment on this video. If you have any questions, you can ask me in the comment section of this video, or you can even reach out to me on my Telegram, and I will try my best to guide you and to help you. So best of luck for the upcoming week and best of luck for your trading. Be cautious, be very careful, and make sure you do proper risk management